What's up, traders? So in today's video we're going to be talking about switchback energy, or ticker symbol SPE, and whether or not you should invest in it. Now, I understand that today SBE had a drop of almost 10% in their stock price, but that's not to worry. The entire market rallied down, and that's okay. We are on a strong uptrend as the entire market continues to rally, and these pullbacks in the market are extremely healthy and necessary for there to be a stronger push to the upside. So I would be very optimistic and very bullish in these upcoming weeks towards Christmas time, because that's usually when the stock market begins to rally. Now, we do see here that SBE switchback energy, like I said, dropped 10%, and that's fine. On the month, it has been up at around a peak of $42. So right now, if you definitely want to invest into it for the long term, it's down $4 from a peak, okay, just this month, by the way. But let me show you guys something quick. I made a little bit of money today thanks to Disney. Now let's get into SBE. So guys, before ChargePoint merger closes, make sure to invest in Switchback Energy. So Switchback Energy is a special purpose acquisition company. I think we all know that it's a SPAC, and it's a blank check shell corporation designed to take companies public without going through the traditional IPO process. SBE stock has almost tripled since announcing its merger with ChargePoint, which has the largest electric vehicle charging network in North America and Europe. This is an important topic to make sure we get very clear. They are the largest electric vehicle charging network in North America and Europe. The expansion that they can have with the upcoming and the rise of EV cars and electric cars in general is very astronomical. In California, by 2035, all vehicles are going to have to be hybrid vehicles, meaning they are going to have to be part electric and part gasoline powered as well. But at the same time, they're just going to become more and more affordable, and it's just going to make more sense to have a fully electric vehicle because it's going to save you money on gas, and there's room for expansion on that. So SPACs are quickly becoming the go-to method for taking advantage of the renewable energy market, which is all set to surge after President-elect Joe Biden's victory in the US election. In a low interest rate environment and with high valuations of other stocks, SPACs become a sensible place to invest your capital. Now, SPACs have raised more than $60 billion this year. That's a lot of money. More than this in the previous 10 years combined for companies that wanted to avoid the hassles that go along with traditional IPOs. That's really why there has been a very dramatic increase in SPACs, okay? Now, plus with the rise of Tesla, now the most valuable car company globally, EV car manufacturers are enjoying unprecedented interest. At least 9 clean energy companies plan to go public between now and the end of the year via reverse mergers. Now, that can be very important. We see that all these EV charging companies, all these EV electric car companies that go and become public, they usually always spike. Now, if you are a trader and just want to take advantage of that, of course, the increase in hype around these stocks and just the sheer amount of volume that is going to be put into buying shares at the market open when these shares are announced and up for offer will more than likely cause the price to increase, and you can certainly take advantage of that if you have a scalping mentality. Now, it can be seen as good news and bad news for Switchback Energy acquisition that investors are looking desperately for the next Tesla and looking towards SBE stock. The good news is that ChargePoint, with which Switchback is merging, isn't competing with Tesla. As a provider of electric vehicle charging stations, ChargePoint in fact should benefit from the growth of Tesla and other EV manufacturers. That is a huge selling point for ChargePoint. They aren't trying to compete with Tesla, okay? They are trying to just help Tesla. They're just trying to latch onto Tesla, latch onto other EV car companies, and trying to just provide a service that will benefit them long term. And guys, if you are buying this stock, this SBE stock, buy it and leave it, okay? A lot of people tend to buy these stocks, and on the first pullback they freak out and they end up just selling out of their position for a loss, and that's the majority of the times how people lose money in the stock market. They're impatient. Oftentimes you will see a stock that will rally up, people buy at the highs, and then when it goes down they end up just selling their entire position, and then they hit themselves in the head because it rallies up even higher. What you should do is enter a position that maybe is a tenth of your position at first. When the stock declines, average down on your position and hold it through the years, okay? Maybe that'll help you with your emotions and not having the conviction to follow through on your long-term investments. Also, make sure you have enough money to just set it and forget it, okay? Now, so what makes the stock intriguing is that the presentation released when the merger was announced in September contained 49 slides, but the one that really stood out was the 11th one, which was titled ChargePoint Growth Directly Proportional to EV Penetration. It highlights a key point in the bull case for SBE stock. It's a play on the broader EV trend. Investors in Tesla or Fisker or even General Motors don't necessarily profit simply because electric vehicles growth continues. They need to correctly pick a winner. That problem is mitigated for ChargePoint. As long as manufacturers sell more EVs, it doesn't really matter who's the manufacturer. Demand for charging stations will rise, and ChargePoint is there just to take advantage of the situation on that. Now, some of the things that they have achieved around 2.6 billion miles driven on electricity, about 85 million charges delivered, and about 104 million gallons of gas that have been avoided. In 2019 alone, the greenhouse gases emissions that were avoided were equivalent to planting 2.9 million trees, capturing 231,000 acres of US forests, or recycling 7.5 million bags of waste. Now, you can just imagine how this will continue to just be a better thing for society as the years go on, and how it will make it a lot more intriguing for investors to want to put their money into a company like this. So that's kind of the main gist of ChargePoint. There's a lot of room for expansion in this company, and it's definitely something that I'd be willing to put my money into. And as a matter of fact, I will be putting my money into this company. But you guys got to understand that these companies, they will go up, they will go down, and that's because they are inflated with a lot of people who are just trying to get in on a quick buck. They're trying to buy some shares and then sell out of it. And any news of a pullback in a market, and they'll end up selling their shares, which ends up dropping the entire stock price down $10. 10%, which is a lot, but at the same time, if you're a long-term investor, you can just you can continuously add into your price, or you can just sell cash secured puts, and that's for a whole nother video. Now, that's been it, guys. Let me know what you guys think in the comments down below. Would you guys like to buy more of these shares? Why or why not? But yeah, that's been it, guys. Peace.